Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Dan Bird. How you doing, sir?
I'm doing well. I survived Ian.
There you go. Well, what we're going to do here is we're going to take a look at what I would call the internals. I think we're going to look at 16 companies that are above their 50-day moving average. We'll talk about some big names below their 52-week average, and we'll just look at what's going on inside the market for specific names. What do you got?
Okay, let's see here. I'm just putting something together here that I think will be interesting.
No problem.
And let me show my newsletter too, real quick.
Yeah.
This will be right below it, actually. Okay, let me share.
Mm-hmm. There you go.
All right, my newsletter, if anyone wants to receive this week's newsletter, which has some information about the hurricane, which shows you where my house is in relation to the hurricane. As I went through 8 hours straight of consistent 90 mile per hour winds. Consistent. It's hard to wrap your head around what that really is like.
Yeah.
I mean, at any second, you're expecting your whole house to just explode and be blown away.
Wow.
And you're expecting to become Dorothy. But this is the newsletter, breakpointtrading@gmail.com. Just send me an email and I'll add you to it, and I'll send you this week's newsletter. This is one of the things that I had in there, Stock Trader's Almanac, that shows the trend, the historical trends going back 70 years, back to 1946. And you can see what October looks like. We still probably have some downside left. We might get a brief rally, but then we may hit 3,500 or 3,200 by the end of October before we get an end of year rally.
Okay.
The other thing I wanted to show that I did not put in the newsletter is a breakdown of the annualized performance of the S&P going back to 1950 for October.
Oh, wow. Look at that.
Okay. So October 1st through the 6th. So that's this coming week. This goes back to 1950. So back 72 years. For the coming week, historically, it's been up 35%. For the week following, actually 2 days following, so the first half of the following week, it's been down 29%. So if we do get a brief rally, don't expect it to last. And then it bounces back slightly between the 10th and the 21st. It goes up 15%. But then look at that second to the last week of October, October 22nd through the 27th, down 43%.
Yuck.
That's historically going back to 1950. Down 43% at the end of October. So if we do get a rally, which all the signs are pointing that we probably will, and it could be a violent rally, back to 3,800, 3,850, somewhere in that neighborhood, use it as an opportunity to get out of things that you've been in and losing money on. Or you even could take the opportunity on a down day to buy something or add something, but just realize that we still have more downside to go, probably, before October ends.
Yeah.
Now, the good news is, the little glimmer of hope is that very last one. October 28th to October 31st is the beginning of the best period in the stock market for the whole year.
Oh, wow.
And they just for those 3 days, the market has been up 67% in those 3 days.
That's annualized performance.
That's annualized. Yeah, that's annualized performance for over 70 years.
I got you.
All right. So to annualize 67%, you can figure out how much it would have to go up in 3 days.
Yeah.
All right. So let's now go over to and take a look at one of the things I said in the newsletter was, one of the bottom finders, actually I have my bottom finder chart here, right here. One of the things in my bottom finder is I want to see the put call ratio, which is this red one down here. I want to see that above 0.75. I want to see the VIX above 30. And I want to see the number of stocks above their 50-day moving average below 10%. I want all three of those things to happen at the same time. And right now they are happening at the same time. that is typically when a bottom starts to form. All right. So the percentage of stocks above their 50-day moving average for the S&P on Friday was 3.2%. So if you take 3.2% of 500 stocks, that gives you 16 names. Only 16 of the 500 were above their 50-day moving average. So which ones were they? So these are the stocks above their 50-day moving average. You can think of these as, in a terrible market, they seem to be holding up. Now, if the market continues to go down, like in June when we hit the low, that percentage was 0.6. That's only 3 stocks.
A couple of these names jump out at me as just odd, like Twitter.
I know, right?
Right. Twitter's above
Twitter, I think, is going to hang around this $43 point until Musk actually, does what he ever needs to do. Yeah. So I would kind of throw Twitter out because it's a
story stock. It's a story stock.
Yeah. Well, not only a story stock, but it has an event going on right now that's going to keep it at that level.
Yeah, may or may not. Yeah. Netflix is interesting, right?
Netflix, yep. Netflix is interesting. We can actually take a look at these, look at the charts on these, and see what they look like. So here's Allstate. I mean, a lot of these are staple stocks.
Yeah, I saw that.
Consumer staples, things that people need to buy no matter what the market's doing.
Yeah. So
that's one thing you'll notice. So Allstate, and the thing to watch here is this kind of brownish area and this red line right here. That is the 50-day moving average. So all of these stocks should have closed above that line.
Right.
That's what this is all about. But the other thing to watch is, where are they with their 21-day moving average? Remember the session that we did on reversion to the mean? Stocks like to come back to their 21-day. So where are they in relation to that? And then the volume, you can see here, it's actually going down on high volume. And then, just the performance indicators. The accumulation distribution is still high. That means it's still being accumulated, even though it's selling off. So those are just some things. I'm going to go through these pretty quick. Just some things to look at when you look at these names. So this is Biogen. Biogen had a big announcement on an Alzheimer's drug. Yeah. I mean, that's bucking the trend of the whole market right there.
Oh yeah, that's right? Talk about an event. Yeah.
Right. Here's Cardinal Health, healthcare name. Yeah. Above its 50-day, right at its 21-day. Here's Constellation Energy. Constellation Energy is just kind of holding in right there. Yeah. And it's reversion to the mean. It really hasn't broken down, even in a bad market. So that looks like a really strong company. Here's ConocoPhillips. This is coming up from the bottom. So it came up, it's starting to trade above its 50-day moving average. Here's General Mills, again, another staples stocks. They actually reported a couple of weeks ago. They had good numbers. You can see this big gap up right here. But now they've come down. They're sitting right on their 50-day moving average. So the thing to watch on this one is, does it break down? This is the one that, if the market continues lower, right now there's 16 stocks above their 50. This is one that will go down and we'll end up with 5 or 7 stocks above their 50.
Right.
Here's Eli Lilly. Another one thing you'll notice is there's quite a few healthcare stocks in here. That one had a nice gap up along with Biogen. Here's Marathon Petroleum, another oil company, kind of similar to ConocoPhillips. Here's Netflix. Netflix looks like it's kind of hanging in there. It's hanging out right at in fact, it's 21-day and 50-day is almost exactly the same. Yeah. 21-day is 232 and the 50-day is 231.
Yeah, I see that.
So talk about reversion to the mean. It's like hanging out right at that line. Right. It's not going one way or the other. Even in a bad market, it's just hanging in there. Nelson, which is a media company, that one looks like it got bought out by somebody. Whenever you see that kind of thing on a chart, that means there was an acquisition. Something just hasn't been completed yet. So that's not one that I would touch. It's not going to go anywhere. PG&E, another utility company. Utilities and staples right now is the place to be if you want to preserve capital.
Mm-hmm.
And then Regeneron, again, another pharmaceutical company, kind of going sideways, coming right close to its 21-day. I mean, this is the kind of company, if you want to be a trader, or even if you want to buy a stock. I mean, we'll look at JP Morgan. I'm curious to see what that one looks like too. It might be on my 52-week chart. We'll see if it's there. But the thing to do is to wait for it to pull back close to its 21-day and buy it there. Don't buy it when it gaps up like this.
Right.
So it's trading down, and that's the thing that, you know, novice traders typically do. They see a stock gap up, like, oh my God, it was 600 back here, and now it's 700.
They rush
I better get in. I better join this train. Well, now it's back below 700.
Yeah.
So don't buy it on a gap up like that. Wait for it to pull back, which it normally will, back to its 21-day reversion to the mean. Charles Schwab, hanging in there pretty well, actually. Still below its 200-day, so be nice to see it get up above that. But accumulation distribution is pretty strong. So Wall Street's still accumulating. Schwab. JM Smucker, again, another staple stock. Everybody needs to buy peanut butter, right? No matter what the market's doing.
Yep.
That's hanging out right at its 50-day. That's one that could drop below it if the market continues down. Here's Twitter. You mentioned Twitter. Look, Twitter's actually moving up. But Twitter has an acquisition event. So once everything with Elon Musk gets figured out and they go to court and the court decides he's got to buy it even if he doesn't want to, right? That's why this is really not moving much from around that $45 level. Once that gets completed, whatever the outcome is, you're going to see this just go sideways like that other one I showed you. This will just be, you know, straight across when that happens. Vertex, another pharmaceutical company, going right back close to its 50-day. So that's that. That's it for that one. The stocks below, these are major names, below their 52-week moving average. JP Morgan is not on this list. So JP Morgan must still be above its 52-week. But the important, I won't go through each of these unless you want me to look at anyone in particular.
Yeah, why don't we jump to JP Morgan?
Okay, sure. But the thing to look at is the sectors that these are in.
Yeah, very tech heavy.
Remember, these are stocks below their 52-week low, below their 52-week low. So Microsoft, Cisco, Broadcom, there's an industrial, railroad, semiconductor, Qualcomm, Booking.com, software company, internet, computer services, semiconductors have been killed. You know, so here's Splunk, our old alma mater. So these were, I just ran a search for the major names below their 52-week moving average. So let's go look at.
Let's look at JP Morgan.
Yeah, let me go to this one and then let's look at JP Morgan and see what that looks like.
Yeah, and again, just kind of full disclosure, I think JP Morgan is the best bank. I saw where it was trading down for the low of the day. I put in just 20 shares, so it's not a big purchase for me. But I did buy a stock. It did execute at 104 something, I think, or 105.40 or whatever. Oh yeah, there it is. 104.40 is what I closed at.
This is the new Zuber indicator.
Just so it closed at 104.50 and I bought at 104.40.
So it's going to be interesting to track the Zuber indicator because it could go either way. Zuber, who hasn't bought a stock in 20 years, buys his first stock. Does that mean the market is getting ready to rally?
Well, I hope it doesn't, because I wanted to ladder in. I'm doing what you taught me.
Yeah, that's true.
Yeah.
Or does it say? Or does it say we finally sucked him back in?
Yeah, we finally got him.
Let's continue heading down.
All right. So what do you see with JP Morgan? What do you see?
Let me look at a couple. So here's JP Morgan. It's hitting lows right there. Let me look at a 5-year weekly chart. So here's what it looks over 5 years. Accumulation distribution's not looking too good.
Nope.
Well, nothing should look good right now. I mean, one thing that's in my newsletter, if anybody gets it, I put a quote in there that says, when you should be buying, you won't want to.
Yeah, the reason I bought was because again, just full disclosure, right? I think JP Morgan is the best bank. I like to own the best quality. I bought it because it has a 4% yield or dividend, and I'm choosing to reinvest my dividends. If I do buy stocks going forward, I'm not buying tech names and things like that that don't have dividends. I'm only buying dividends. So this was one of the ways I did it, so I could get some yield instead of having cash. So that's,
Yeah, I
again,
mean, those are really good reasons. And by the way, a point that a suggestion that I will give you, and any
Sure,
traders out
please.
there that are interested in the market, if you do decide to buy a stock, put a note, write a note to yourself, or put it in your system somewhere, like in Schwab, you can write notes in there. Put a note in there that indicates why you bought it. What are the reasons why you bought this stock?
I like it.
And when it drops lower, I mean, you said you want to ladder in, so you actually hope it will drop lower.
Right.
So you can add more to it. But when it keeps going down and you're concerned of, did I make the right decision? Or you start getting emotional because you don't want to be an emotional trader. Go back and look at the reasons why you bought the stock.
Great idea.
And then forget about that you own it. Just for a second, forget about that you own it and think to yourself, would I buy it here?
Right.
So what I see on this chart is that there's a gap down here at 100.
Okay.
There's a gap here at $100. And it looks like a pretty major support resistance line. You know, came up right near it here, went down, came up there, went down, here again, went down, finally got above it, started going back up, went down below it, got it back above it.
That's the COVID crash right there, right?
This is a COVID crash right here.
Right,
yeah.
Right.
And this is the 2018 correction back here.
Okay. Yep.
So, you know, those are pretty extreme situations. But what I see probably happening with JP Morgan is probably going to go to 100 or somewhere in that neighborhood.
I like it.
So you may have another opportunity to add to it.
Yeah, my next buy is going to be at something with a 9.9 on it. That's just what I've told myself.
Yeah, it could very well easily get there, especially if the market gets down to 35 or even 3,200, which, you know, based on what I showed for October, the last part of October, we could easily have I think we're going to get a rally, a brief rally, and then it will be brief, and then it will start heading lower, and we'll probably go through the lows of Friday and head to 3,500 first. 3,400 is another major level, and 3,200.
And again, this is a long-term hold for me. What do you think about reinvesting dividends? Do you think I should just take the cash, or do you like reinvesting dividends?
No, if you're going to hold, if it's a long-term hold, then I definitely reinvest the dividends.
Yeah, that's
leave it in there. Get paid for waiting.
Exactly.
You know, you bought some here around 104. What was the low? The low was
104.40.
Right. 104.40. So, you know, you bought some there. If it keeps going down, you're waiting for it to go back up. So you're just getting paid to wait for it to go back up.
Yeah, exactly. So cool.
Right. So if it's a long-term hold and they pay a good dividend, just hang on to it and reinvest the dividends, put it back into it, because it'll compound your gains.
Yeah, I think what you and I will be doing over the next year or so is I'll probably be building a portfolio with kind of 10 stocks that are long-term. Right. I'm not a trader. I will never be a trader, but I think I will come up with a list of 10 stocks that that roughly will each make up 10% of my portfolio. And I'm going to guess 8 or 9 of those will be dividend paying stocks. I may take a flyer on something, but that's right. What I'm thinking about right now.
I think that makes sense. Let's look at one that I mentioned a couple of weeks ago, STEM.
Oh, you know what's something funny? I bought STEM too. I forgot I had a trade.
Oh, really?
I put in a price. I could look it up. I think at like 12.74, which was way below where it was trading when we talked about it.
Yeah.
And I forgot I did a good until canceled, and it actually executed. Oops! Don't do that, folks.
Well, no, there could be good reasons to do that.
No, it could be, but again, I think
if we get this, do you still have it?
I do. Yeah, I didn't sell it. That's 12.74. I think I bought.
All right, so it's at close at 13.34. So you're making money.
Yeah, I'm up. Yep, I'm up.
You're up.
But it was clearly a mistake. I want to own all my mistakes. I put a good until cancel because I was thinking about doing it for a week.
Did you put a stop in at the same time?
I did. Yeah, it was like 11 something, high 11.
Okay, so it never hit. So never hit 11.
No.
11 is below its 200 days. So that's a good place to put a stop.
Yep.
So it never hit. So just leave it in there. You might want to put a trailing stop on it.
Yeah.
You know, put a trailing stop of 10% or something. It's at
Yeah. I like to own my mistakes. I would consider that a mistake. I forgot I had that on. So don't do that.
So
It's okay.
well, I mean, that might be a good testament for STEM, because STEM never hit. You never lost money on it.
No, I didn't lose
I
money.
mean, if you really want to make sure you don't lose money, put your stop right at where you bought it.
Yeah.
And just leave it there and forget about it.
Yeah, I think so. I think I might actually do that today.
STEM could go to the moon.
Good,
and you won't even know it. You won't even look at it.
Yeah,
right?
I definitely don't look at my stock portfolio.
But I think
much.
one area, if we get this rally, and even especially into the end of the year, two areas that are going to be, 3 areas really that are going to be, I think will have explosive rallies, will be renewable energy, which STEM is in, technology, which STEM is also in, but within technology, software, and semiconductors. Now that's going to probably be the end of the year. That's going to be like November, December timeframe, not October. It'll be at the end of October when we start moving up into the best time of the whole year for stocks.
Yep.
But those 3, I think, will probably have a good ride into the end of the year. But STEM, I think, will still turn out well. The other one that I'm in STEM too, by the way, still.
Oh, okay.
Is ChargePoint, which I think also has an opportunity to do well. ChargePoint is a charging station company for electric vehicles.
Very cool.
So this one, they got an upgrade, and they gave it a target of $25, and it very quickly went to 20 and came back down. And I bought it down here when it came back down below the 21 day.
Nice.
So we'll see. I've got to stop on this one. I think around 14, right down here, where the support is.
Again, there's been so many things. If people were to go back to our beginning videos, you told me about using stops. You've told me about laddering in. You've told me about right sizing your position. There's a lot of stuff that we may need to go back and visit, maybe in an upcoming weekend, just to remind people of what you're doing to help me.
That's a good idea.
Become a better investor.
Yeah.
So very cool. Show your newsletter one more time, please.
All right. There you go. breakpointtrading@gmail.com. Just send me a note and I'll send you this week's newsletter, which has a picture of where my house is located with Hurricane Ian.
Yeah.
I put that in the newsletter.
I would tell everybody, if you don't understand why October is called the bear killer, that is in this video or in
There's an article
newsletter.
from Stock Traders Almanac, which all they do is historical data on the stock market. They have an article about October being the bear killer.
Yeah, I would get the newsletter just for that. Dan, thank you very much. I'm glad you survived Ian.
Oh, hey, one more thing. I almost forgot.
Sure. Oh,
I was looking through a lot of the notes on YouTube.
Yeah.
And one guy said, what mug is he? What Starbucks mug is he? I guess he saw it and he's sipping out of it. And so today is Charlotte, North Carolina.
Yeah.
But let me show you my whole mug collection.
I thought that's what that was. Look at
it. Might not be all of it because there might be a couple in the dishwasher, but these are all of my mugs. There's like more than 60 of them. Some of them are international up here at the top. Others are from cities and states. But my rule, you see Splunk right there in front. My rule is that I have to personally, physically go to that city or state and buy a mug. So I've told people that I collect these mugs and they said, oh, let me send you one. I said, no, that
doesn't count. That's cheating.
Violates the rules. I have to actually be there myself in order to collect a mug.
Yeah, so well, you and I used to travel a lot. So
yeah, that's right. All the time.
There you go.
So that's my collection.
There you go. I love it. I love it. Buddy, thank you very much. Thank you for being here. Thank you for making me a better investor. Again, I think we'll do that next week, the week after, just to remind people how all this started. Because I think, again, I have a shopping list. I moved over, a decent pile of capital. I plan to go shopping probably in the next 90 to 180 days. So let's remind people how you're teaching me.
I think that might make sense. I think you might have a good chance between now and the end of October.
I agree. Let's do it.
To shop
Let's do that next weekend.
Okay, sounds good.
All right, buddy. Thanks again.
Have a good weekend.
You too.